Welcome back, everyone, to the deep dive.
It's great to be back.
All right, so today we're diving into something that I know a lot of people have been asking about.
Mhm.
You know how to get started with investing when you don't have a lot to invest?
Right, yeah. That's a really common question, and there can be so much information out there, it's hard to even know where to begin.
Exactly. So you actually sent us a really great video about this. It's a YouTube video by Mark Tilbury.
Yeah, he does some great content.
And he basically takes on this challenge of like, okay, what if you only have like $100?
$100, yeah.
What are some of the different ways that you could potentially invest that money? And he goes to kind of a whole
He
spectrum.
really does a spectrum from like super low risk things to things that are,
Yeah.
getting a little bit more into the gambling territory.
Yeah, and I know you mentioned you wanted to really understand these options without getting bogged down in all the technical stuff and feeling overwhelmed.
Yeah, for sure. I mean, I know like the basics of investing, but I'm really looking for that clear breakdown of the different options and what the potential risks and rewards are.
Absolutely, and that's exactly what we're going to do today. We're going to kind of unpack these different ways that you could potentially use that $100. We'll talk about what could go right, what could go wrong, and really try to make it clear and digestible.
Sounds good. I'm excited to dive in.
Yeah, let's do it. So the video starts off with what's considered the safest option, the lowest risk, and that's high interest savings accounts.
Yeah, and he actually puts a number on this. He has a little Risco scale,
Yeah.
and this one comes in at just a 1 out of 10.
Yeah, so this isn't about making a ton of money quickly, right? It's more about building that kind of foundation of financial security.
Exactly. And I think a lot of people overlook the importance of having a solid emergency fund. And that's really what high interest savings accounts are perfect for.
Especially these days when, things are a bit uncertain. Having that cushion to fall back on if you have unexpected expenses can really save you a lot of stress and potentially even more money in the long run.
You avoid having to go into debt. You avoid those high interest rates on credit cards.
Yeah.
It's all about protecting yourself.
And the video also makes the point that finding really high interest rates right now is a bit of a challenge.
Yeah, the interest rate environment isn't exactly ideal at the moment.
But even a modest interest rate is better than nothing, right? Because if your money is just sitting in a regular checking account, it's actually losing value over time due to inflation.
Yeah, inflation is that silent wealth killer that a lot of people don't really think about.
So what would you say are the key things someone should look for in a high interest savings account?
Well, the video points to two main factors. A decent interest rate, obviously, even if it's not spectacular, and easy access to your funds.
Right. You need to be able to get to that money quickly if you have an emergency.
Exactly. It defeats the purpose if your money is locked away somewhere.
And the video even mentions some specific banks that are known for their high-yield savings accounts.
Yeah, he talks about Ally Bank Marcus by Goldman Sachs and Citibank.
And he even shared that he personally put $100 into a Marcus account, which at the time was offering something like 0.7% interest.
Yeah, it's not going to make you rich overnight, but it's a start, and it's a safe place to park your money.
Okay, so moving on to the next level up in terms of risk, we have gold. This is a 2 out of 10 on that Risco scale.
Yeah, and gold has this reputation as being a safe haven asset,
Yeah.
particularly in times of economic uncertainty.
And the video kind of dives into the history of gold a bit to explain why it's seen that way.
Yeah, he mentions how the U.S. dollar has lost a significant amount of its value since the Federal Reserve was created back in 1913.
That statistic was pretty wild, 95% of its value.
Yeah, that's pretty mind-blowing when you think about it.
It really puts things into perspective, and the video uses this example of like a $100 gold nugget back in the year 2000.
Right, and how that same nugget would be worth considerably more today.
Even though the physical gold itself hasn't changed.
It highlights the idea that gold can hold its value even as currencies fluctuate.
So why do you think gold is seen as so stable?
Well, it's been used as a form of currency for centuries. It's a finite resource, meaning there's only so much of it in the world.
And it's durable, it doesn't really deteriorate over time.
Exactly. Those factors all contribute to its perceived stability.
Now, the video does raise an interesting question. If gold is considered so safe, why isn't it a 1 out of 10 on the risk scale?
Right. And the answer he gives is opportunity cost.
So could you explain what opportunity cost means in this context?
Sure. So basically it means that while gold might be good at preserving your wealth, it might not provide the same level of growth potential as other assets like stocks.
So you might be missing out on bigger gains by putting your money in gold.
Exactly. Especially if you're looking to grow your money over the long term.
So if someone with $100 wanted to get some exposure to gold, how would they actually do that?
Well, he talks about two main options. One is buying physical gold like coins or bars.
But that can be a bit tricky, right? Especially with a small amount.
Yeah, you often end up paying a premium over the spot price of gold because of dealer markups.
So what's the other option?
Investing in gold through broker apps like Robinhood or Trading 212.
So you can buy shares of ETFs that track the price of gold without actually having to physically own it.
Exactly. It's a much more accessible way to invest in gold, especially with a smaller amount of money.
And the creator mentions the GLD ETF as an option for U.S. investors and that he personally invested in a similar gold share through Trading 212.
Yeah, he's really transparent about his own investments throughout the video, which I think is really helpful.
Okay, so that's gold. Let's move on to the next option, which is low-cost index funds.
Yeah, this one comes in at a 3 out of 10 on the risk scale, so still relatively low risk.
And index funds are often recommended for beginner investors, right?
They are, and for good reason. The video does a great job of illustrating the power of compound interest.
Yeah, I love that example he gives of investing $100 every month into an index fund and how over 30 years that could potentially grow to over $120,000.
It's amazing how small, consistent contributions can really add up over time.
And the video stresses that you don't need to be a stock market expert to invest in index funds.
It's really about taking a long-term approach and not trying to time the market.
And he brings up Warren Buffett's famous $1 million bet, which is always a great illustration of this concept.
Yeah, where he bet that a simple S&P 500 index fund would outperform a group of hedge fund managers over a decade.
And he won.
He did, proving that even professionals often struggle to beat the market consistently.
And one of the key reasons why index funds tend to do well is diversification.
Absolutely. And I love the analogy he uses to explain this. He compares an index fund to a bag of Haribo gummy bears.
Yeah, you get a mix of all the popular candies, just like you get a mix of all the top companies in an index fund.
So you're not putting all your eggs in one basket.
And he specifically mentions the S&P 500, which includes companies like Apple, Microsoft, Amazon, Facebook.
Yeah, all the big names.
And the video also touches on the importance of using tax-advantaged accounts like Roth IRAs in the US and ISAs in the UK.
Yeah, these can help to shelter your investment growth from taxes.
But it's important to note that there are annual limits on how much you can contribute.
Right. It's not unlimited.
And he shares that he personally invested $100 in an S&P 500 index fund, and historically these funds have averaged a return of around 7% per year.
Which is pretty solid, especially considering the low risk.
Now, I know some people might be thinking, well, $100 isn't even enough to buy a single share of an S&P 500 company.
Right, but that's where fractional shares come in.
Could you explain what those are?
Sure. So a lot of brokerage platforms now allow you to buy fractions of shares. So you can invest in an S&P 500 index fund with just $100 because you're buying a portion of a share.
Oh, that's really helpful. I didn't realize that.
Yeah, it's made investing much more accessible for people with smaller amounts to invest.
All right, so next up we have REITs, real estate investment trusts. And this one is also a 3 out of 10 in terms of risk.
Yeah, and REITs offer a way to invest in real estate without actually having to buy and manage property yourself.
So you're essentially buying shares of a company that owns and operates income-producing real estate.
Exactly. And they can hold a variety of properties like office buildings, shopping malls, apartment complexes, even hotels.
And the video uses a great analogy to explain this. It's like a group of friends pooling their money to buy a rental property.
Yeah, and then they share the rental income. That's essentially how a REIT works on a larger scale.
And one of the key benefits of REITs is that they're required to distribute at least 90% of their taxable income to shareholders as dividends.
Right, so you get a steady stream of income from your investment.
And the video highlights how REITs have historically performed pretty well, sometimes even outperforming the stock market.
Yeah, he mentions that in the years leading up to 2019, REIT ETFs actually had an average return of 10% compared to the S&P 500's average of 8%.
And he specifically mentions the Vanguard VGSLX as an example for U.S. investors.
And he also shares that he personally invested $100 in a globally diversified REIT through Trading 212.
Okay, so we've covered a good range of lower risk options now. Let's step it up a bit and talk about some medium risk options.
Okay, let's do it.
So the first one in this category is buying and selling items, and this one gets a 4 out of 10 on the risk scale.
Yeah, and this is where things start to get a bit more hands-on.
It's less about passive investing and more about leveraging your knowledge and skills to find good deals.
Exactly. If you're good at spotting undervalued items and you know where to sell them for a profit, this could be a good option.
And the video creator mentions that he focuses on pre-owned radio control model gear and golf equipment because those are areas he's interested in and knowledgeable about.
Yeah, it makes sense to stick to something, you know?
He also brings up the example of Pokemon cards and how their value has skyrocketed in recent years.
Yeah, some of those rare cards are going for crazy prices.
Like that Logan Paul Charizard card that sold for over $150,000.
It's wild.
And the creator actually walks us through an example of how he found a model engine on Facebook Marketplace for a good price and plans to resell it on eBay for a profit.
It's a good illustration of how this kind of investing works.
All right, now let's move on to individual stocks. This is where the risk level jumps up to a 6.5 out of 10.
Yeah, this is definitely not for the faint of heart.
The potential rewards can be much higher, but so can the risks.
Exactly. The video creator even shares a story about his experience during the dot-com boom, where he made a lot of money, but then also lost a lot when the bubble burst.
It's a good reminder that the stock market can be very volatile.
Especially when it comes to individual stocks.
And the video talks about how the creator used to use fundamental analysis to pick stocks.
Yeah. Looking at a company's financial statements,
Yeah.
their market position, the quality of their management team.
And he points out that a lot of that information is now readily available online.
Yeah, you can find it on sites like Yahoo Finance.
But then he also brings up this really interesting study where stocks picked randomly by monkeys actually outperformed some professional hedge fund managers.
Yeah, it's a classic study that shows how unpredictable the market can be.
And he uses this to introduce his own kind of tongue-in-cheek stock picking method for this $100 challenge.
The dartboard method.
Yeah, he literally throws a dart at a board with a bunch of randomly selected stocks.
And it landed on Samsung.
So we'll see how that one plays out.
Only time will tell.
The video also mentions a platform called Weibo that was offering 3 free stocks for depositing $100 at the time of filming.
Yeah, that could be a good way to get started, but it's important to remember that individual stocks are inherently risky.
Right, now we're entering the high-risk territory, the stuff that's almost like gambling.
Right, the stuff you should only do with money you're prepared to lose.
Exactly. So first up, we have cryptocurrency, and the video focuses specifically on Bitcoin. This is a 9 out of 10 on the risk scale.
Yeah, this is definitely not for the risk averse.
And the video does a good job of illustrating the extreme volatility of Bitcoin.
He shows how a $100 investment back in 2015 could have grown to thousands of dollars by the time the video was made.
But he also balances that with the example of someone who invested $100 at Bitcoin's peak in 2017 and how much they would have lost.
Yeah, it's a stark reminder that those huge gains can also turn into huge losses very quickly.
And the video mentions a few other cryptocurrencies besides Bitcoin, like Ethereum and Ripple.
Yeah, there's a whole ecosystem of cryptocurrencies out there.
And for anyone who wants to learn more, he suggests looking at the white papers for these different projects.
Yeah, those are the technical documents that outline how they work.
And he touches on some of the key concepts behind Bitcoin, like blockchain technology and its decentralized nature.
Yeah, the fact that it's not controlled by any government or financial institution.
And he really stresses that this is a high-risk, high-reward investment.
Only invest what you can afford to lose.
And he shares that he personally invested $100 in Bitcoin using the Coinbase app.
Yeah, and he even mentions a referral link where you can get some free Bitcoin.
Okay, and finally, the last option, and the riskiest of them all, the lottery, specifically scratch cards.
This one gets a 10 out of 10 on the risk scale.
Yeah, the video is very clear that this is gambling, not investing.
He even says that it's not something he recommends, but he includes it because it's something that a lot of people do.
Yeah, and he mentions the statistic that 57% of Americans buy at least one lottery ticket per year.
It's pretty crazy when you think about the odds of winning.
Yeah, he compares it to the odds of winning an Oscar.
You're thousands of times more likely to win an Oscar.
And to really put this to the test, the creator actually buys $100 worth of scratch cards and scratches them all on camera.
Yeah, I was curious to see how this would turn out.
And well, he only wins back $50.
Ouch, a 50% loss.
Yeah, so it's a pretty stark reminder that the lottery is a very, very long shot.
It's basically entertainment, not a wealth-building strategy.
So we've covered a lot of ground today, a wide spectrum of ways to potentially invest $100.
Yeah, from the super safe to the super risky.
And the best choice for you really depends on your individual circumstances, your risk tolerance, your financial goals.
Exactly. There's no one-size-fits-all answer.
And we really hope that this deep dive has helped to clarify these different options for you.
Yeah, we've tried to break it down in a way that's easy to understand, and hopefully you've gained some valuable insights.
So as you think about your own $100 and how you might want to invest it,
Or maybe even just start saving it.
we want to leave you with a final thought, a question to ponder.
Okay, hit me.
Considering all these options, the potential for huge gains, the potential for big losses, the consistency of some approaches versus the volatility of others.
Right. The spectrum of risk and reward.
How do you balance that desire for high returns with the need for security?
It's a really important question to ask yourself.
Because ultimately it comes down to what you're comfortable with and what aligns with your long-term financial well-being.
Exactly. Your investments should reflect your individual circumstances and goals.
So think about that. Think about what kind of investor you want to be and how you want to approach your financial journey.
And remember that the most important investment you can make is in your own financial education.
That's so true. Thanks for joining us today on The Deep Dive,
It's been a pleasure as always.
and we'll see you next time.
See ya.
Bye-bye.